Hello and welcome to day number 33 of our little series Travel Trader, and today I want to talk to you about the two ways, and we actually only have two ways to make money in the world. And the reason is because in the stock market we actually have both. Well, with most other things we have to decide for one, or we do something for one main reason only. So if you think about number one, would be something where we buy something at a low price and we sell something at a high price. And that is the business or the deal with every business. So everything we buy something, we try to buy it as low as possible and we try to sell it higher. In between there can be some process where we enhance the value of a product, or where we get different parts, put it together, and then we sell a car whatsoever. But it's always what we call capital gain. So we buy low and we sell at a high price. Then we have number two, which is when we own an asset and we get some compensation for it. So this is what we would call cash flow. So we basically own an asset, let's say it's a house, and someone pays us some money for using it. We could own a rental car, we could own a car that we rent out, we could own a house or property that we rent out, we could have any kind of rights, a license, we could have an idea that we patented and then we license that product. So it comes in different names, but it's always cash flow. Someone pays you for the usage of something. And now this is one of the beauties about long-term investing in the stock market, because we actually have both. First of all, if we buy a share, so this here represents our little share, and that share we already know will go up and down in price, but over a long time we are going up. Economic cycle, enhancement in productivity, earnings and so on, they typically climb. That's true for the last 120 years. As long as we have data in the different markets. In the US we have less data, but we pretty know it's true in the UK since the 1700s, same in the Netherlands, Amsterdam. So stock markets, companies are getting more and more value over time, and therefore their price goes up, and therefore the price of the individual stock goes up. Of course in cycles, so it's always going up and down, but the general tendency is that it goes up. And that company here has a second portion, because the main reason for a company, this is what I was speaking about to the children, is they sell products, they deliver services, but their goal, their target is to make money to be able to do so. So if you want to change the world, if you want to do something, you will need some means to it, and these means will be represented or bought or paid with money. So this is essentially important for a business to make enough money in order to get more products to more people, in order to deliver their services to more people. It's the same for charity. Charities can be run, or will be run, are run actually, like a business. They have different goals, of course, so their goal is not to put out as much products as possible, but to help as much, and the same principles apply. So they need funding and money as well. So they generate money, and when a company generates money, they sell things, they have some costs associated with it, and the surplus is their earnings. And these earnings, let's write them down, earnings, they get distributed. So part of these earnings are what we call retained. So let's say our company retains $3, or let's say roughly 60% of their earnings, and they do that because they have to invest, they have to buy new things in the future, they have to expand their business. And remember, the costs are already deducted here, but they want to grow, they want to have more manufacturing plants and all these kind of things, so they might need money for future investments. So this is what they do, they retain their earnings, and the other part is they pay out the earnings, and then we call it a dividend. And you as an owner, you are eligible to get the dividend from the company's earnings. So when they pay these earnings out, you as a shareholder, for owning an asset, same with our house up here, and them using your money in order to fulfill their mission, to fulfill their business, they pay out some money to you, so you get a dividend, you have these earnings coming in passively without having to do anything, and the price will go up and down, of course, but mainly up over time. So if you are a shareholder in the long term, you have both of these things going for you. Why am I telling you this today? Because this morning I did some research yesterday evening, and this morning I posted a few shares where I personally believe that they, first of all, they pay a high dividend, but that's only one part of the equation, and there are several reasons for them to go up depending on what their business is, because the business is thriving as a whole, or the sector is doing very well, or the sector is undervalued, that was one as well, or they are simply in a country where the currency lost a lot of value compared to other currencies, and I think that the value of the currency will go up. Of course, we want to combine as much as we can, so we want to have undervalued companies, great dividend returns, and we want to have future opportunities. So these were the three basic criteria where I went through a list of stocks that I generated, and I posted that for my mastermind students today, at least a few of them, so they can have a look into it. And then the next thing is, the last thing they have to decide on is the timing. When do I buy? Because we want to buy low. Yeah, the price is low, but it might still go down and we might get it lower. And we want to sell high unless we want to hold it forever, because we are only interested in the dividend. But that's something that you establish once you have several millions already in place and you want to have, let's say, a safety net, a safety cushion. So you wait until you have whatever number makes you secure and comfortable. So let's say 5 million, 10 million, whatever your number is in your currency, of course, that depends as well. But then you start to take some of the money, put it into long-term investments, so you get that passive income through dividends. You start to diversify, do different things with it, get different companies and so on. So that's what these companies that I posted were about. So we wanted to have different things, get some dividends out of it for the long-term passive income just generated, and we were focusing on that cash flow part. But we will never underestimate this, because in many, many cases, especially when you're talking about high-tech companies, the buy low, sell high, or the price going up is a huge, huge, large part of what you can make. So this is a long-term approach. We combine both of these, capital gain and cash flow. And when we trade very shortly, of course, let's say we trade tomorrow morning, market opens, we think it will go up or down, or whatever our opinion is, according to our research, according to our indicators that tell us with a huge likelihood what will happen next. And we trade only on that day. We focus on capital gain. Maybe we write it down here. So this is capital gain. So the difference in our buy price. So we buy it at a low price, and 5 minutes later, 20 minutes later, 2 hours later, 3 days later, 3 weeks later, we sell it at a higher price. Here we want to have both. We want the prices to go steady up, and we want to get our dividend income passively with cash flow. So that's it for today. By the way, we only have these two ways to earn money in general. So you either buy high, sell low when you're in a trading business, whatever it is, or you're a company producing something, but you're still in a trading business, even if you add value, produce something out of different things you bought. And the other one is, of course, having some assets, renting them out, licensing that, or you own some ground where people dig for gold or oil, when you will get royalties. Comes in different names, but it's always cash flow. So only two things we can use to make money, and I hope that you will get a lot of these together, so you have multiple streams of income. That's a concept that we might talk about next week, and we will continue with our series, building up step by step until you can make a lot of money from trading, stock markets, building businesses, and so on. Most of these things are very closely related. Once you get to the point that you deeply understand how a business works, you can build one on your own, but you can also judge other businesses and then pick the best businesses, because then your likelihood that it goes up and you make a lot of money with it is far higher than otherwise. Thank you very much for watching. If you want to know about the concept that I just explained, please let me know in the comment section. If you have any other questions or any suggestions what to talk about next week, I'm more than happy to answer these questions. Otherwise, I wish you a wonderful Sunday. We had beautiful sunny weather here today in Cyprus, and I see you all again tomorrow when we start again trading and making money in the stock market. Thank you very much for watching, and goodbye.